Hello guys, welcome again. So today I will be discussing on whether the market is about to drop big time because of US-Iran conflict, because this is a major event. US has attacked Iran and it is a face-to-face military conflict which is against a really tough opponent. Iran is a no pushover opponent and it has a large number of ballistic missile capabilities and military capabilities. So it is going to be a hard battle, in fact. So whether the market will react in a major way with a huge panic selling or not, let us discuss it today. So before that, let us see the trend line. So the long-term chart has a resistance point over S&P 500 here. So it is under resistance. It has slammed into the resistance quite a few times, like 4 times in the major resistance, and then it is pulling back, and you see the 20 moving average is broken and the S&P is sitting on 50 moving average, 100 moving average. And if it somehow breaks on Monday 100 moving average, the destination will be 200 moving average, and then if it eventually breaks 200 moving average, it is gonna be a catastrophic decline in the market. And if you see that the market rose quite a few months, like it has been rising for last 1 year, while if you see the MACD says it is gonna go down because it is in huge divergence with MACD and also with RSI. So RSI and MACD are in major divergence with S&P, because for quite a few months stock market is rising and MACD and RSI are falling. So it indicates that market is very much wrongly priced. So there must be a huge shift. And how it is gonna be a huge shift? Because US and Iran is going to be in a battle, and this battle is a tougher battle. In recent times, US has not been engaged in such a major conflict with such a powerful military nation. So this is going to be a tough thing for the market to absorb. This is going to be probably a huge shock, because this will create a lot of short-term uncertainty, like it did in the beginning stage of World War I in 1914. It was a major shift in the market. Market started to do panic, and it could be catastrophic if the market were open at that time. Market became closed eventually. And in the day of Pearl Harbor attack, it in WW2, it also created a major shock in the market, and market dipped. And so it happens in the past that when a major military conflict begins, the market seems to react violently and becomes volatile in most cases, and that may create panic. And if you remember 1987 crash, or if you have studied 1987 crash, it was a huge crash of 22.6% dip of Dow Jones in a single day in October 1987, and it was a major dip, like it was a major slide in the market in a single day, 22.6%. Can you imagine how big it was? And this was not only this was not because of a military conflict, but rather it was a combination of factors, like the economy was doing poorly and the overvaluation factor was also in effect. So those are the things. And now the market is also experiencing combination of bad things, like GDP report. If you know that it came in only 1.4%, down from 4.4% in the Q3. So it is a major shocking news. And also the job market, if you have closely followed the last 4 to 5 months of job market, it is just catastrophic. So the situation is very volatile now for the market. And also, if you know, inflation, it is picking up. And if you know that Hormuz Strait has been closed by Iran because of the military conflict, and it is going to make a major uncertainty because crude oil will jump and eventually it will bring uh, gas prices, food prices to the upside, and also it will create massive volatility and also uncertainty in the market and may bring panic selling. And if such panic selling comes in the coming Monday on 2nd of March 2026, you may see a major slide in the market, like Dow may be down by 5 to 6% in a single day. Nobody knows, or even higher percentage decline in a single day. You never know if panics engulfs the market, and if the panic keeps on persisting, then a week of bloodshed or bloodbath may be happening in the market, and you should be better prepared for that. Psychologically prepared for that. And if you want to take your position in the short side, you have to think whether you should have your portfolio in a rearranged way so that you do not take all the shocks of the market. You should not take all the hits of the market. You should rearrange the portfolio based on the current situation. Like there might be waves of panic selling, so be better prepared. Okay, so that is my message, so you understand that the situation is very volatile now and it can turn to a global conflict if nothing can be consulted in the diplomacy, so it could be even worse. So be careful and show some some brilliance in arranging your portfolio so that you do not take all the shocks or the hits. Okay, so thank you so much for watching. Have a good day. Bye.